What's up? Hope you guys are having a great rest of your day. I am going to be talking about why is Bitcoin bloody? Why am I saying this? We're trying to be completely truthful on this channel. We're trying to get you the best and most accurate kind of consensus on the market. Why am I saying this? Well, this is dependent on a lot of things that people often look off to the side on. They might just, not take them into accountability. They might ignore them, but we've been talking about volume a lot on this channel. And the thing with volume is it is very, very great at predicting price long term. And that's if you're using it with the right type of consensus. It's just overall a great indicator because it shows the money flowing into the market, the money flowing out of the markets, and the overall money that is in the market flowing in and out in general. And basically, why am I saying it's going to be so bloody? Well, first of all, we have to realize that we had these dips here back in the past. We'll just cut this off around May 17th, and we'll go look from over there. And what we see is whenever we have dips, we have a large volatility to the upside, and obviously not as large to recover this large dip that we had here, but we have been recovering some of these downside movements, but we really haven't broken above this 42K zone, which is what we first had right here. We had some sort of little break, but it wasn't too significant. But every time, right, we'll have a dip, we'll have volume go up to the upside. Pay attention to the volume at the bottom if you guys can't see it. We'll zoom in a little bit, but we have these pushes in volume every time we have a pump or a dump. And it's been slowly losing momentum. Why has it been losing momentum? First of all, it has to do with the fact of people have been leaving crypto. People have been leaving in hordes on crypto. That's what on-chain data is showing. That's what it's supporting. And if volume does not break out of this trend, which we'll get into, we are going to see some significant downside. I'm trying to go quick on this because New York just opened, and we need to really make sure to see exactly where they're trying to get the market to go. Normally, they'll let us know in the first couple hours. But with that being said, as you guys can see, from the starts of, the 17th, if you guys were just looking at how fast are people buying these dips back, where are they selling them off at? This is kind of how you can get, we're in a downwards trend, and this isn't a micro downwards trend. This is a macro trend, and we are at significantly low volume levels. Look how low we are on volume, okay? Look how low we are compared to, just a few weeks ago. Look how much people have been leaving. That is pretty insane to me to see this, how it looks. It looks extremely bearish right now. And for the most part, right, we haven't had volume on both sides this low. If we have some sort of manipulation, which a lot of this, guys, this is just manipulation of price, pushing the price down, pushing the price up a lot. That's kind of what happens, and this is what makes this volatility. It's a game of a bunch of degenerate traders versus a lot of educated traders. But for the main part of it, a lot of this volume, right, it's just price manipulation. And why won't they be manipulating price where it is right now? Why won't they have this huge downside or upside movement, liquidate a lot of these traders that are currently in their trades? Is my guess is we will see, a few more of those moves. But for the main part, a lot of the money, a lot of the liquidity that, people make money off of every day trading crypto, it's starting to dry up. And it has been drying up. And if this asset's not as profitable for trading as some other assets might be, you would move on to those other assets as a trader to really capitalize on your gains. But for the main part, yes, crypto is extremely profitable. But from a risk mitigation standpoint, to a larger institution that has a lot more money to deal with, they might be getting to the point of kind of getting out of it. Volatility has been dying down, but look at this volume, guys. Look at this volume just slowly dissipating into the abyss. If we have some large push in bearish volume, I can guarantee we will see some lower levels with Bitcoin here. And there are some important upside possibilities that we will get into as well. Pretty exciting upside areas. Let me go to that. I'm on Heikin-Ashi candles. I'll give you guys a little lesson on how to use these and how to identify when trend is swinging to the upside or downside, trend reversal. But for the main part, you guys got to understand we do have a lot of resistance up here at this 33K level. We also have one at this 32,800 level. As you guys can see right here on the 4-hour, once we got to this level, look at the amount of selling pressure that we had, upwards wicks. Not too much people were buying here. They weren't able to drive price out of the zone. This is where we broke broke off of and consolidated. It's where we broke off of as well. We weren't able to hold this area. We pumped down, and as of right now, still going to be a resistance zone that we need to get through. And we also hit a pivotal point. This is where we bounced off of, which was this 1426. Let me throw this up. Yeah, kind of around that zone was a pivotal point that we had mapped down, which we'll be getting into later as well. But basically, what we're seeing right now is selling pressure, right? Obviously, selling pressure there. We have selling pressure here. We have selling pressure here. And, there's some buying pressure on the downside, right? Yeah, we do have buying pressure. This is the support and resistance, right? It's just selling pressure, buying pressure. That's all you guys have to think of it like, and it will help you tremendously. So do have some buying pressure in these levels, right? But for the most part, I would say with volume going down like this and, with buying pressure, which is volume mainly, right? It's buying and selling pressure. But with overall volume going down, right? That reflects on price going down. And the amount of volume, let's go on the daily just to give you guys another visual representation. The amount of volume that we're currently at right now, it kind of supports the price we're at, right? Kind of supports the price we're at. We really could, if we did see as low of volume as we did when we're at these higher levels here, which was just 34K, we could see some lower levels in retrospute. But for the main part of things, I do believe that we will be going down to, I would say, my price predictions are going to be somewhere. We can use future resistance and supports off of this, future points where we do see buying and selling pressure, or previous, which we'll get into now. But for the main part of things, I do see some sort of levels, obviously, that we still need to hit in order to make it down on that descent into hell, descent into Satan's asshole, which will be, we need to break through 28, of course, as first, but we do have some sort of consolidation in this 26 to like 25K area that I do think will come into play. We have to be using this little support that we have right there, which was around 25,700. And then we do have, these are the major supports and the resistances from the past, just trying to map out a little bit of this bridge that we see here, and get, some support levels. We need to know what's going to be happening in the near future to best prepare for it. And I do see this 23 to 22K level definitely will come into play at some point, especially because we've really only been going down, guys. It's only been 3 months. 3 months isn't a long time. It might seem like a long time for you. It might seem like, it's about a moon soon. I've been in crypto for 6 months, and 3 months seems like a while, but wait 3 months, see where the price is, and I can guarantee you we will be under 25K. To the best of my knowledge, unless, Amazon or Apple all buy Bitcoin or some crazy amount of thing around those lines happens, every single rich person's going to go and FOMO into Bitcoin. We're just going to keep on descending down. As volume's going down, price is going to come down with it. There's really nothing that's, we've had bullish news as well. That's one of the main things, guys. We have had bullish news. We just had news, the other day. Microsoft was making some sort of, there's been bullish news the past couple days. And the thing with that is bullish news is not having any sort of effect on the market. It means we are in a bear market. That's really what, what we see in a bear market. It's just my perspective on it. If we see bullish news in a bull market, it pumps it up. If we see it in a bear market, it does nothing to price. And just taking that into consideration, who knows what we need to see, right? We just need to see more money come in the market. That's all I care about, right? If we want to see that upside potential. But to give you guys an explanation on how to use Heikin-Ashi candles is, you guys are going to be using these off of finding some sort of trends, some sort of momentum and trend change. So I would recommend you could use these with MACD. We'll go through on MACD here specifically. All right, so let me delete. Let me just go down here. We delete this. This will be a very, it's a very good indicator for people that I would say, for some of you guys that are unfamiliar with, in general, how, where to start with, on indicators, what to start getting into, for example. And this is a very, very easy beginner one that you guys can start doing. It does have some pretty good success rate if you guys do use it right. So the main rules of this little strategy is I could use some RSI with this, but we'll just use MACD, not to confuse any of you. All of you guys will leave this channel having a successful strategy after today's video. And you'll get some more tips every single video. But basically, what we're doing here is MACD is a momentum indicator. It shows changes in momentum. We also have the signal right here of when we have a cross, change in momentum, kind of a signal that when we cross, going to be a change in momentum to the opposite direction. But what we see is currently with Heikin-Ashi candles is it puts these candles into nice ranges. Okay, we are seeing we have two candles, right? We have two candles, and what Heikin-Ashi candles are is if price comes down, right, to the second candle all the way down to the middle, then it'll start to show up bearish. It's taking out a lot of the noise on regular candlesticks. Like if we go on regular candlesticks, this is what they look like. There's a lot of noise in them. And what this does for you guys is it takes out a lot of the noise and will make seeing the charts a lot easier in that retrospect or that aspect. But basically, what the rules are to this strategy is you must wait for some sorts of trend reversal, right? How do you spot a trend reversal? Well, you guys are looking for doji candles with high wicks to the upside, high wicks to the downside, and some sort of slowing down in speed. Has to be the same on your MACD as well. What you're doing is you're waiting for the exact time on when we see these dojis, when we see this price reversal, so to speak. We're seeing those types of candles that have high wicks. They have, some consolidation, for example, up here as well. We'll just circle that to, give you guys an idea. So we see these candles, high wicks, wicks on both directions, whatever it might be. And then we also see, right, we also see support and we also see resistance at these areas. And, oh shit, you're just trading based off of market structure, which is where are we at? Are we at a resistance, a support level? What's Heikin-Ashi showing? Is it high wick? Are we showing bullish momentum? Because when we see Heikin-Ashi candles that don't have any downside or upside to them at all, this means that we are in a strong trend. As you guys can see here, we have momentum where there's no downward wicks on these upward candles. That gives you that we are in a strong trend, and that's when you know that trend has changed. Once you see these candles that have a large momentum and no momentum to the upside. And when it does change is when we see that momentum kind of slow down, pull back a little bit. We might be at a resistance, we might be at a support level that will make your trades a lot more successful when using this. And for example, we see momentum to the downside here. And once it starts to pick back up, right at a support level, right at a support level, we pick back up and we ended up not having too much of a breakout here because we had another pullback at this resistance level. And you guys are just using both of these together. They work better on the longer time frames if you were to use them. Just showing you on the hourly so we can get more examples. For example, let's go through some bad things that you guys might mess up on. Right? So this trade could have fooled you out, right? But we do still see, wicks to the downside, right? We still don't see that much momentum changing. These are still considered, doji candles. We don't have these fully wicked out candles with nothing to the upside whatsoever on them. That's an indicator of, oh yes, this is a strong trend. We are above a resistance level, or we just broke out of a resistance level and things are looking good. So that's kind of the strategy, and you're using this with MACD. Once we do reach some sort of cross, it does kind of give you some sort of indicator that, momentum is changing. You could see it in the MACD as well, which is the lighter, right? The lighter momentum's changing to the upside on that. And when it shifts back down, we're having the downside trend change as well. You guys need to be buying whenever we see all of these line up to some sort of bullish some sort of bullish confluence at once. Let me drink some water. I'll put it into simpler terms. Basically, for example, we have this push down in momentum. Okay, so when am I buying? Okay, when the hell am I fucking buying? We see that we have doji candles, right? We haven't had a clear trend reversion. We haven't seen that yet. And I would be looking at entering trades when we see, first of all, we see the MACD shift. Okay, we have MACD shift. We see the cross right at this candle. Okay, right at this candle here, which was this one. And we have a support / resistance at this level. We don't really have any supports or resistances that are away from this level. So this gives you indicator that we could see volatile movement to the downside. And what happened is we saw volatile movement to the downside. We broke through resistance, MACD flipped, and it gave us indicator that we saw strength in these candles going down. because none of them were wicking to the upside. We didn't see any wicks to the upside, you know, whatever it might be. And you guys could incorporate EMAs in this. You can incorporate a lot more, but there's no need for you guys to do it if, you know, you don't understand them. So I'll be making videos on strategies, giving you guys everything you need. I'll do it on research too, because all of it, you need a template. You just need a list of directions. When do I enter a trade? Instead of, you know, explaining to me a bunch of bullshit, you know, like what's price action? What do we need to see? We'll go over every single thing here in the next week or so. And yeah, it'll be a lot of fun, and just having it all up online will be looking great for you guys to, you know, come join the Discord, come put in effort, and, you know, to start, you know, really getting good at that stuff as a group as well, because we could all work together on that. But yeah, we are looking bearish just because we haven't had any sort of upside momentum, right? MACD just flipped. Why am I bearish right now? It's because MACD flipped. For example, right, MACD flipped. We had the flip right here, and we had this push to the downside. No sorts of upside candles. Yeah, we have some wicks up here, but for the main part, we're still in this extremely, you know, one-sided push to the downside. Volume as well is kind of helping that too. And we don't see any, you know, volume slowing down. We have some bullish divergence on volume. But for the main part of things, I do think that, you know, this is just on the hourly though. So this works better on the longer time frames, of course. But on the hourly, this would be showing, you know, there's really no reason that this shouldn't be going down unless we have some sort of wick to the upside and we see some of these trend reversion candles, which are doji candles. And we see, you know, MACD come up. That's just another confluence for that. But yeah, I would say I would get out of my trades once we see the trend flip with the candles, of course, as first, because MACD might be a little bit lagging, or if we're at a critical support level, which we are at a critical support level, which is this 314, 315 area. All right, so there you guys go. Hope that makes sense. I might just do another video on that and another strategy and just write them down to easier terms, a template, so you guys aren't confused, because that was confusing as shit. I can guarantee it for a lot of you. But yeah, basically what we see here is where we're at in price is we're kind of at a pivotal point, right? The pivotal point actually of yesterday was 33K. And what we saw with 33K, we came back up. This is where our trend line was yesterday. This was our trend line, I believe. Let's see. Yeah, that's our trend line. We came back up to our trend line, and we ended up holding it for a little bit. Not too much momentum up here, okay? Why did I draw this trend line up here? Because we had resistance up here. All right. It wasn't because of, you know, I'm just drawing this trend line, yada, 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 you know, because trends are cool. Trends are your friend, but if you're using them just alone, you're probably not doing them right. You need to be drawing trends with support and resistance incorporated with them. You need to be drawing trends with, you know, other aspects in mind than just, you know, breakout trading or whatever it might be. You want to be able to, you know, see multiple things that's giving you more indicators and more confluence that this is going to be a successful trade. And we see that, you know, we have this resistance level up here. This has already been printed. We have support down here already been printed. We broke out of this and we had very, very low volume. MACD was showing volume was slowing down up here. And then we had that flip to the downside. But yeah, we are printing a bullish candle on MACD right now for that. But still have to see some sort of clear change in momentum. We need to get up to that second candle in the middle of it. But for the most part, right, this is kind of how you guys need to be, you know, especially if you're new. I'm not going to tell you how to chart, but I'm just going to tell you some great ideas on where to start. But yeah, it's all about taking stuff at your own pace. 4 hour looks bullish or bearish as well. But we want to see at least some of these levels get incorporated. I really do think that we'll be able to hammer out around this 30K level. Why do I say the 30K level here? Do I see this happening today, right? It's kind of too early to tell, right? We don't have real trend direction. I am in a short right now, but that's only due to the fact because we haven't reached or pushed above any sort of pivotal resistance levels, which the pivotal resistance level right here is 32K. And if we do push above that 32K with some momentum, yeah, I'll probably get out of my short. But for the main part of things, that's kind of my level of resistance that we have here on the micro time frame. We have the 32K resistance, we have the 32,500 resistance, and then we have this resistance up here at 33K. Those are the 3 micro resistances that we have that I am going to be trading off of. We have pivotal points at all 3 on the micro time frames. And what we're doing, right? What we're doing is we're seeing where momentum is when we're at these, you know, sort of pivotal points. And, you know, it's giving you a good indicator. Pivotal points are extremely, extremely valid and important things to be trading off of because they have a high success rate. We'll talk about that in a video. I'll do a whole entire video on pivotal points alone. They deserve their own. But basically, we have this 31,452 level that had a pivotal point. We bounced off of that. Didn't quite see because it was in my box. But main point of the story, main pivotal point of the story is, you know, these are our resistance. They're matching up with our resistance and our supports and major pivotal points that we do have on the graph as well. These are the hourly pivotal points, always going to be different from the daily as well. Daily pivotal points are extremely, extremely important. Depending on where the daily candle is closing is based off of that. The high, open, low, and close is where that pivotal point will be. But for the main part, right, we're going to want to see price with Bitcoin push above this 32K level first. And if we're not able to hold above this 32K level and we are able to push above it, I would say if volume slows down up there, look for the next leg down. That's the higher low. Okay, that's the higher low right there. That's the trend that we're in. And we're starting that downtrend. Boom, right? But for the most part, right, yeah, we break through there and then we somehow miraculously break through these other upper levels that we talked about with the same sort of style, right? We break out at 32,700 and we hold there and we have high volatility. And, we're not going to consolidate in this type of market for too long. We don't consolidate for too long. Just kind of how crypto is, people saying it could go sideways is a whole lot of shit because chances are, 60, 70, 80% of the time, it's not going to go sideways. So yeah, that's a 20% chance or whatever it is, 10% chance of it going sideways for a whole day. Less than that, guys, way less than that. But yeah, just to be completely honest, we're probably going to need to see around this 32,700 level holds, but we need to see high volatility. If we really, really want to break out of this level, then we have this other 33,300. It's around the 33K to the 33,300 that we do have some resistance at. And with the shift down in volume, it's not looking too bright as we kind of had this shift down and this tone down in volume over the past 3 or 4 days, the past week, honestly. And that's why I am so bearish. I'm sorry. But you guys will be able to buy your coins at lower prices. And let's get into those lower prices right now. What do we need to push below to make this descent into Satan, right? Well, we need to see at least this 31K level be held as a resistance level below it. This is what we have had happen here in the past somewhat. We've had a bounce off this 30K. But just to clear things up before we get too deep into this, right? So notice the volume that we've had once we've had these pushes, to the downside on these certain days, okay? We've had extremely, extremely high volume to the upside because it's just been matching kind of what we've done on the downside. Not too much push to the downside, so don't expect a large push up. That's another thing, right? Volume can indicate how fast of a push was it down. Probably going to get some sort of a mean average with a push to the top depending on the occasion. But it gives you some sort of range on how high that push should be. We're not screaming 40K unless, we have a large push to the upside that's insanely big. But we're not showing that we can go to 40K currently with how low volume is. It's theoretically impossible, right? You guys are like, no, it's true, man. It's not. All right, but for the most part, we need to see price hold below at least, I would say, this 31,600, 700 level and kind of use this as some sort of resistance because we do have this lower zone, which is this 31,500 all the way down to this 29,900 that is kind of the new range that we're in. And it's just playing ranges once we get into these areas, but it's playing ranges with extremely, extremely high volatility. You don't want to be picking one side of this range for too long. You want to be setting tight stop losses, taking profits extremely fast, because when we're in these ranges, what happens, okay? Price goes down to the fucking ground, and then it comes back up like a goddamn, an angel. And we have to make sure that when price does get down into these areas, which it is pointing towards, that we are prepared. And to really be prepared in these areas, you have to understand how volatile we are, right? Look at the, let's go to the 1 hour candles real quick in these areas. For those of you apes that are going to be, trading these higher time frames, look how fast we make that descent down. But if we go on Heikin-Ashi candles, right? If we go on Heikin-Ashi candles, let's see how easier this is for you guys to, somewhat theorize this, okay? So look how easy this is. Instead of having a bunch of candles barraged at you, we have a large push to the downside. We break through that. We test support that we've built up over in the past. We bounce off of that support, break through another sort of resistance level that's important. Resistance, boom, to the upside, consolidate, trend reversal. Nope, just a consolidation, another push to the upside. Yeah, but on the hourly time frame, you guys might get barraged by candles, whatever it might be, when we are in these low volatile zones. Just want to let you guys know to be, if your chart's not working for you, if your strategy's not working for you, whatever you guys are doing, you obviously got to change it up. And I hope to give you guys a lot of different ways that are easy. Just one indicator, start you off with one, send you on your way. If one works for you and you only want to use one, and that's great. But if you're using one indicator, 2, 3, 4, 5, 6, and your numbers are not looking good, then, that's not good. I don't like it, right? You guys can use 0 indicators. You have good success rate. You have good numbers. Yep. I don't care. Don't give anything about what you're doing. Just besides, the fact that you're successful, it's great. You're obviously doing something right. That's really all that matters. Someone could tell you, oh, you need to know this, that, or the other. But the only thing that does matter is actual profit, and how much profit are you making via percentage. That's really the only thing that matters. Don't think you need to learn this, that, or the other. You just need to learn, what is going to make you profitable. What is the success rate of whatever it might be that you're doing. A lot of misconception around that era, right? But we need to really see, that push downwards. We still are going to need to wait for this hourly candle. This hourly candle will be important. We could see some sort of trend reversal here. We do have a support level here. So even though I think it's bloody, right? I think it's bloody, okay? That is because we just proved the fact that, we have resistance here. We don't have too much buying back volume down here. We don't have, too much, whatever it might be, volumes going down. So we are going to be getting bloody. We are going to be getting bloody here in the near future. So you should be happy instead of upset that you have the ability to look at volume, to look at price action, and understand, oh shit, if we do not pick up here in a few days, we're going to go fucking down. And it's as easy as that. And it's just something that, I will be able to give you guys my best opinions on it. Give you my best sort of course on YouTube. So it's just something that you guys, you need to put some work into it, but it's just a mindset that you need to theorize to really understand how it does. And it's as simple as a template, right? I'll get you guys a template. I'll do that. It'll be a lot easier. I'll give you a template. It'll be like 10 things that you're going to fill out every single day to get an accurate read on what the market is going to do, or the most accurate that you can. Maybe I'll start off at the beginning or something. I'll talk to some of you guys in the Discord about it after this video is done. Go join the Discord if you guys want. Have a lot of alert-based bots that post in there, getting you guys some nice calls already for free. Obviously, you don't ape into the calls when the bots call them, but some of them are pretty successful. Make some percent a day off of that. But the main fact of them is to have you guys look at the TA and why they're calling them based off of volatility. It's based off of other trends as well. And we also have a lot of other things like that in this new Discord. It's the V2 Discord. Basically, it's going to be the better and more improved version of the other Discord, whether you like it or not. So it's what it's going to be like, okay? And let me pull up Bookmap real quick. Check out the Bookmap levels. This is actually pretty important, all right? So we have a Bookmap thing, not sponsored by Bookmap, obviously. Let me go into the Discord. Let me get the Bookmap up. Maybe I need to mute myself. I'll deafen it up. All right. Let me change my display capture. Shit. How would I do this? All right. So here we go. What is Bookmap, guys? This is what we kind of use to get some sort of accurate read on where support and where resistance levels are currently. It's extremely fast-paced, but it's pretty interesting to gauge a certain respect on the market. All right, here we go. So this is what Bookmap looks like, okay? It's free too. You guys can see quite a lot for the free version. But what we see, obviously, as of right now, is these are the buy walls down here. These are the sell walls, okay? We have more sell walls than buy walls. This is just from 3,100 all the way up to 3,200. So if I was this guy who was sharing it, I would zoom out a little bit just so people get the macro perspective. But we have paid for a version of this, free, always streaming in the Discord. And it's cheap too. It's like 20 bucks a month if you guys do want to acquire this, but you can get basically everything for free with the free account on this that you wouldn't know what to do with. They only have a paid one. I'm just giving you guys a tool. Like, I'm not trying to shill it or anything, but it's a free thing that, it takes a while to understand. I'll describe it, I guess, really quick. Don't worry about this line. You won't have access to this line. It's a heat map. This is a sell wall. This is a buy wall down here. We have a buy wall at 31,700. We also are looking at, I think he's zooming out, but we're also looking at, there we go, long time frames. There we go. But these dots, these icebergs are buying and selling pressure. It's showing, that we had selling pressure all the way down here, and it's getting real live time order book data. And then we'll have a push upwards in volume. The larger the iceberg is, the little dot, the bigger the orders are, the larger and more volatile orders are. We do have some sorts of supports at this 31500 level. We also have another buy wall here at the 314, 3156 level. But for the main parts, we have more selling than buying pressure, as you can see on this chart, but that can easily change with manipulation. But this gives you some sort of indicator, some sort of, indicator where the buy and sell walls are right now, because we will see price action move off those, and I can guarantee you they do all the time. And the fact is just being able to fully, understand that this is resistance and support, okay? This is based off of actual orders. This isn't based off of some, hooba jiba, like this is resistance, this is support. It's based off of, actual data, actual, people have buy orders here, people have sell orders here, because I feel like that's where a lot of you guys go wrong. I do sometimes, when it's the historical supports and resistance, I will go look and see if we do have buy and sell walls there currently. But for the most part, people have used those in the past. They continue to use them. That's why they pan out. And with, the newer ones that I see, some of them are based off of just the buy and sell walls that we see. People have orders at these certain prices, but that doesn't mean that they can't move them. But it's a fake, then it's a fake wall that's there, and then they're just going to dump price below it, and they break through support. But it's just the fact that there is buying pressure there. There is selling pressure there for sure. As you guys can see, large wall was put at 318 just right now. But yeah, that's kind of Bookmap. I might be bringing that up in every single video if you guys like it, because it gives a better read on the market, right? Gives a better read on the market. We have to be careful when this 1 hour candle closes. If it closes bullish, trend reversal, okay? Trend reversal could be amongst us. Let's go look at MACD. MACD seems to be reversing upwards on the 1 hour. So we actually could be seeing a trend reversal to the upside. We need to wait for this hourly candle to close because we don't have all the data yet. A lot of volume comes after the 1 hour. We are at this support level as well. So we could have a nice move to the upside, or we can just consolidate in this range. So we have to be careful. It's going to take, some momentum to break out of this 3,200 range. We did make a lower low here just by a little fraction. But for the main part, just with the simple indicators that we're going to be using, just so you guys can learn them. We're not going to go 1, 2, 3, 4, 5 indicators at once. Just supports, resistances, price actions, MACD, Heikin-Ashi candles, what's support, what's resistance, historical support and resistance, what time frames, right? Yeah, we want to be using larger time frames as well, but it's just important. Yeah, 15-minute, we've already showed a reversal, not the strongest sort of reversal, but a reversal indeed. We have support around this 315 level that we've touched down here in the past. But yeah, for the most part, we do see we'll go into shorter time frames as well. I'm figured that, the ones that have stayed on this channel, it's probably more important to get into those for you guys, because you guys are actually here to learn. You guys are here to not waste your life savings away on the shorter time frames, but just understand actually how they move, and having the right strategy with it will help. But first of all, we see, momentum is pushing up on the 1 hour. Let's go to the 15-minute just for some future time frames to look at. Yep. We see it moving upwards. We're even flipping. We had the crossover on the 15, and we also see, not too much wicks down. We still see wick, right? Wick, a little bit of a wick, but still a little bit of a consensus that, we might see this bullish push back up. I would say chances of this are probably pretty high, but we do have this sort of resistance. Look at this resistance that we see up here with these wicks, right? Boom. Look at that resistance, guys. 1, 2, 3, 4 past candles were at that zone. If we do break through it, it'll probably be a nice little run up that we see maybe to the 3,200 level. But yeah, again, it is a little bit lagging, but at the same standpoint, does kind of record what you need it to record. Okay. Obviously, there's going to be something wrong with every single indicator you use. Okay. There's always going to be some retrodispute, some aspect that's wrong, some condition that you would like it to be better. Doesn't mean add a million other indicators to it. It just means, you got to know what it is. You can't be 100% accurate all the time. You can't be 100% accurate, ever, unless you guys are in the quant trading and, then you can be. But for the most part, if you guys are not into quant, you guys are not into quant development at all, then you can learn it, or you guys can just day trade via turning yourself into a computer. essentially, just with your indicators, because you guys are just making a strategy, right? Think of yourself as you are a computer. You make a strategy, you write down your strategy. If X, Y, Z market conditions are met, I put in a buy order. My stop loss is underneath this because of X, Y, Z. Okay. You'll have people that will explain to you 30, 45, 30, 40, 50, 60 minutes of complete bullshit when all you need to do is know why, X, Y, Z market conditions, enter on this strategy. And realistically, what happens is you get a bunch of information that you do not need in your head and that will mess you up when day trading is extremely risky, extremely volatile. And, most of the time it's these people do not trade like this. They do not have that sort of computer-like mind where you're just like, XYZ needs to be met for me to enter a trade. It has a, X amount of percent, success rate. We use this when we're in a downtrend. We point out that we're in a downtrend, just 200 MA on the shorter time frames. You just use the 200 MA. You could use the 50 and the 21 on the longer as well. But things like that we'll be going over. We'll be taking a deep consideration into and trying to change your mindset. Okay, be open. All right, don't be an asshole. Be a little bit open-minded individuals. And if you guys do want to work on this more, if you guys do want to learn more, the Discord's always open. It's in the description. But for the most part of things, you guys will be getting a lot of knowledge just based off of these YouTube videos because it needs to happen, right? It needs to happen. But yeah, look how low we are. We just had this huge sort of, upside movement, then right back down, consolidating here. That's what I'm saying. If we do break out of this 32K zone, this is just on the 5-minute, we do look to be having some sort of nice push to the upside. That's a $200 push. Don't think of it as that large of a move. Sorry, I'm just talking too short time frames for YouTube. It's probably not the smartest. We'll just focus on the longer time frames. I mean, I can go into the smaller time frames, but if you guys don't understand the longer ones, there's no need for you guys to go into the shorter ones. It just doesn't make sense. It does not make sense. And understanding them is just by having strategies that are successful on the longer term. It's not about understanding an entire 14 books of knowledge, right? You can do that and it will make you extremely knowledgeable, but it's having an understanding why this strategy is successful, why this strategy is successful, and why this one is, and how successful is it, and then implementing them into it when X, Y, and Z is met for you to enter into a order. And then you'll learn more new stuff around the way. But yeah, that's just how you have to be thinking about it, right? Go at it at your own pace. Don't learn extremely fast, okay? You don't need to learn this extremely fast. You don't need to become rich by tomorrow. If you guys go and approach this at the right pace, this can be income for the rest of your life because you took your slow approach without liquidating yourself and you waited for you to actually become higher in success rate. We'll talk about how long that will take. I mean, with the right strategies that I'll be giving, won't take too long, but it's just important to go at your own pace. Nonetheless, if you guys aren't successful with it, just slow down. Don't stop trading and, get to reading. I know a lot of you guys do not like to read. A lot of you guys are indeed illiterate and you don't want to read, but you want to know what? I'm going to be forcing reading on any individual that kind of watches my channel just to get you guys knowledge based to some extent because, the more you read, the more you journal every single day, the more you will learn as a person in what you're trying to do. If you don't want to put too much time into it, it's fine. You don't have to do it. But if you are trying to change your lives, if you are trying to become more successful, you better be reading, you better be journaling, and you better, understand that is, how you learn. That's how your brain works is, by journaling, by actual engagement and learning. That's why we have Discords open. And it's going to be overall a great kind of process. But yeah, Bitcoin is turning up a little bit on the shorter time frames, not confirmation just yet. Just going to be using MACD for this, just to give you guys explanation. I don't need other indicators. I would like them, and I am looking at them. But at the same aspects this is what you guys could do, right? Unless you don't understand what, if you don't understand what these other indicators are showing, we talked about in yesterday's video, we need 4 indicators, right? We need 4 indicators, 4 to 5. In the long run, if you guys want to use multiple strategies, right, I will have a lot of indicators because what I'll do is I'll make strategies with these 5 basic concepts of indicators. We have market structure, we have volume, we have momentum, we have volatility, and then we also have, let me go check. Yeah, I guess I could say, I wouldn't want to miscall it, but yeah, we have trend indicators as well. Those are the 5 indicators that, you need to separate. You need to understand what is trend, what is momentum, what is volatility, what is volume. Volatility and volume are different. Then you need to put these into fruition and understanding them. And then this is if you want to go really complex. If you don't want to go complex, just understand what your strategy is, what type of indicator it is, and understand how those types of trend indicators work. And, you know, you'll have to understand price action on your own, the market structure on your own. That's really the only knowledge learning that you need to know. Resistance, supports, trend lines, and then you're just connecting these sort of indicators that they might see something a little bit differently than you see. And yeah, that's just how it works, and it's important to understand that. We just had a recross. Let's go in the daily time frame, by the way, as well. MACD looks extremely bearish, just pointing that out. Yep. But yeah, for the most part, if you guys disagree, you know, leave a comment down below on the learning strategies that I'm approaching here. I would love to hear it. But just as an overall consensus, I'm getting that, you know, I want to help this community as much as I can. That's the bottom line of it, right? How can I teach you guys the best, right? How can I educate you guys the best? I'm thinking of a daily journal that if you guys are trading every day, if you guys are, you know, trying to create, you know, a profitable trading strategy, you guys have the opportunity to have a journal where it's asking you, where was the support for today? Where was the resistance today? What was the X market condition? You know, what happens when you met this condition and your indicator told you to buy? What was the percentage gains? Whatever it might be. Just having a daily journal for you guys is extremely, extremely important. I'm thinking that is definitely the first step, and then going over a bunch of strategies, because I don't want to go over too many and then confuse a bunch of you. I'm thinking that we just start with one that's extremely easy. Heikin-Ashi candles. You're learning different candlesticks. You're learning a momentum indicator that literally, you know, is extremely important, but it's not important. Okay, this doesn't work unless you're using it with market structure, with support and resistance. It won't work. Okay, this won't make you profitable without market structure, but you could use this with market structure and with a few other things if you want to be profitable, right? Support, resistance, and yeah, I mean, just let me know what you guys think. I'm not getting any sort of live chat. I can't see the live chat for whatever reason. Let me try and pull it up on, okay, do this one. All right, it's gonna take me too long to pull it up. I'll just hop into Discord after this video, but yeah, this is what we're seeing in the graphs right now. This is our trend line. We came back up above it, slowed down in volatility, pushed back down. Longer time frames are showing hella bearish, okay? Shorter time frames are showing little swing in momentum, but you know what? We still are in that macro kind of push down. So if you want to trade against trends, you know, then you could be a day trader, and you could be, you know, you could join the club of the 99% of people who do lose because you still don't have enough knowledge to do it. And if you are successful doing it in a few weeks, I congratulate you, and I want to let you know that, you know, it only takes 500 to around 1,000 trades to actually backtest something properly. If you're trading off of something that you haven't backtested for, you know, certain market conditions an extremely long time, then it's not too usable long term, and you probably will, you know, you probably shouldn't do that. I'm not going to say you're going to fail, or you're going to be terrible, whatever it might be. I'm just saying to have all of those things in order so when it does happen, it's great. And if you are successful, that's awesome for you guys that have just started off. I know there's some people, some people that have been in the Discord, only been trading for a short period of time, but they have been in there 15, 16, 17 hours a day, and they have gained some sort of knowledge on some successful strategies. But take it at your own pace, and really make sure to understand that, you know, we will give you guys a bunch of research, okay? We'll give you guys a bunch of research, show you how to research. We'll give you guys a bunch of DAs and strategies, show you how to do TA, how to do strategies. And you know, it's all based on you though. Yeah, we're giving you things, but at the same time, it's based on you. What are you going to do? How much work effort are you going to put in? Because you could still fail with all of this knowledge and info if you do not put in the work and you do not understand it, which we'll be trying to do our best to explain. But yeah, overall, all right, I hope you guys have a great rest of your day. I will be posting, I guess, a few other content videos today. Make sure to stay tuned to that. But yeah, that's going to be the end of the stream. Have a great rest of your day.